The chair yields the gentleman from New Jersey, Mr. Lance, 5 minutes.
Thank you very much, Mr. Chairman, and good afternoon to you, Chairman. Was the Federal Reserve consulted before the administration announced its proposal about $100 billion in taxes on banks across the country?
I think there were some technical discussions. You're talking about the financial responsibility fee?
Yes. And what are your views, Mr. Chairman, on the imposition of that amount of money on banks across America?
Well, I think in terms of whether or not to impose a tax on the banks, that's obviously a fiscal matter, and Congress has to decide about that. I do think it's important that it be imposed in a way that not have unintended consequences.
Yes.
And one issue which has arisen is that imposing the tax on non-deposit liabilities could have some negative consequences for the repo market. That's an example. So if you want to impose the tax, and many do, you just want to be sure to do it in a way that doesn't create unintended consequences.
Well, my point of view is that the tax should not be imposed because the banks, by and large, have paid back their TARP funds with interest, and those that are still outstanding, General Motors and AIG, would not be liable, as I understand it. And I have a concern that it would lead to even less lending than is now the case. And does the Federal Reserve Board have a position on that aspect of what this might occur as a result of imposition of these taxes?
Well, you're correct that the large banks have paid back the
Yes.
TARP. And in fact, I think it's important to say that the financial part of the TARP, even including AIG, is not that far in the red at this
Yes.
point. I think there's
Yes.
a very good chance the taxpayer is going to come out whole
Yes.
in this entire process, which is an important thing to recognize.
The rhetoric of the president in announcing this was in direct relationship to the fact that funds were used for TARP, and they are being paid back, and I just have the greatest concerns that this would mean less lending than would otherwise be the case.
I believe that one reason for the proposal is that the law requires that the president make a proposal how to recoup the TARP money. And if the TARP technically does include not only the auto losses, but the HAMP mortgage modification program as well.
Thank you, Mr. Chairman. In another area, you note in your testimony that more than half of the fourth quarter GDP growth was due to restocking of inventories, and I don't think that can continue without demand for goods of those inventories. In my opening remarks, I talked about consumer confidence and the report that others have cited. Today's figures with a lack of consumer confidence. What do you believe might be the most effective way the Federal Reserve moving forward could instill even greater consumer confidence, since it is such a large percentage of our economy?
Well, I think that the confidence issues, particularly the number we saw yesterday, which was a disappointing number,
Yes, sir.
Are tied pretty strongly to the labor market
Yes.
situation. And so all the things we've talked about from monetary policy side, from lending, from whatever actions Congress wants to take on the employment side, I think those are the issues that will create stabilization in the labor market, and that in turn is what is one of the keys to consumer confidence.
Well, thank you. A statement, not a question, Mr. Chairman. I think consumer confidence is at the heart of restoring the economy, getting more people working in America, since it's such a large percentage of the overall economy. And I am deeply concerned about any bank tax as suggested by the President's proposal, because I think it would lead to less lending of banks, and what we need in this country is more lending, not less. Thank you. I yield back the balance of my time.